Hello guys and welcome again to my channel. So if you are here in this episode, then that would mean you have already reached the, f- the last episode for the merchandising bookkeeping. Now, we're gonna talk about manufacturing. Okay, so accounting for manufacturing entities. All throughout this series, we have already talked about the accounting or the bookkeeping for service entities. And then we have talked about also the accounting cycle for merchandising entities. So right now, I guess it's the right time to have the accounting for manufacturing. Actually, in the college days, there is a particular subject related to manufacturing, which is cost accounting. And I am really debating myself on how will I present this particular lesson, the cost accounting or the accounting for manufacturing. Am I going to be like I'm going to go through the topics one by one, just like in college, because in the books there will be a topic and it will be discussed, something like that. Or am I going to present it like on the merchandising, like on the sole proprietorship, wherein the pattern is I have to go through the accounting cycle, 10 steps of accounting cycle. That's the pattern there. Of course, there would be some side lectures in order for us to understand, in order for you to understand the logic of the steps and how to do that. But basically, the pattern is going from step 1 to step 10 of the accounting cycle. That's what I really wanted during college. The the manufacturing should be in 10 steps of accounting cycle still, but I did not get that in the books. So, I decided to have that particular pattern. The same with the merchandising and sole proprietorship that we did. Our pattern is to get the 10 steps of accounting cycle in manufacturing. Okay? And after that, of course, we're going to discuss each of the topic. Okay? So let's start. Now, for manufacturing entities, the first thing that you need to know is that the difference between merchandising and manufacturing, um, they're very similar, of course, because they are selling goods. Okay? They are selling finished goods. However, on the merchandise entity, they are already purchasing, those entities are already purchasing ready-made goods or finished goods already and selling them to other people at a markup. Whereas here in the manufacturing, you have to buy raw materials and then you have to convert those raw materials to finished goods and then you sell it to retailers and other merchandisers. So that's the difference on the definition. But basically, when we talk about accounting for manufacturing, they are very much the same. They are very much, uh, what do you call them? They are very much different because of these two things. The first one, inventories. And the second one are the costs. Okay? When we talk about inventories, the merchandising entities has only one type of inventories. That is what we call as merchandise inventory. Ready-made products from others. Purchased from others. Okay? Whereas here, in manufacturing, we have first, raw materials. So when you buy raw materials here in manufacturing, that is already considered as an inventory. Because even if it is not yet finished, it is not yet considered a completed unit, it will become a completed unit soon that will be sold. I told you that inventories are actually items that you have the intention to sell, right? Raw materials are not yet ready for sale, but when it becomes complete, it becomes finished, of course, you are intending to sell them, right? So raw materials are still to be considered as you bought them because you have the intention to sell in the future. Okay? So that's the inventory. Number one inventory for manufacturing entities. Next would be the work in process or work in progress. So Work in process are the items, the raw materials that are already partially converted. Like for example, at the end of January 31, for example, there are some of those that you have uh, transformed already, like 50% complete, 60% complete. Those are considered as work in process inventories. Okay? That is not present in the merchandising entities. So, the clue here is this is partially completed. Okay? Now, we have the last one, finished goods. And these finished goods are actually 100% complete goods waiting for sale. Actually, it's as if it's stages. Like for example, when we talk about raw materials, that's stage 1, work in process, stage 2, stage 3 is finished goods, and stage 4 is actually selling them. It becomes a cost of sales. Okay? So those are the three inventories in the manufacturing companies, manufacturing entities. As compared to merchandising, there is only one type of inventory. Okay? Now, let's talk about the costs, the main costs. When we talk about merchandising, if we're talking about merchandising, the costs are only the purchase price of the merchandise inventory bought. That's the main cost of the merchandising entities. Of course, you will argue, sir, there is a freight in. Actually, freight in is only a minor cost. Okay? Freight in is also in manufacturing. But basically, this is just the main cost of your business if ever you are a merchandising entity. The purchase price of the merchandise inventory that you have paid for to your supplier. So meaning that is already net of this purchase price. You have to imagine that this is already net of purchase returns and net of purchase discounts. Okay? How about manufacturing? On the manufacturing aspect, these are normally the costs of your goods that are you are mainly selling, that you are mainly selling. Okay? So, first cost is the raw materials used. Oh, to be specific, actually that is direct materials used. So what is this direct materials used? We talk about direct materials. Actually, we have two, direct and indirect materials. The direct materials are those materials that are actually traceable on your finished goods or your product. Like for example, if you are selling um, sardines, manufacturing sardines, something like that. Of course, the cost of the fish is considered as direct materials because on the sardines, I cannot I cannot mention any brand because sardines, the main ingredient is fish, and you can see that in the finished goods. Okay? In the finished product. So those are direct materials as opposed to indirect materials. So what are those indirect materials? Of course, when making sardines, canned goods, of course you are using some equipment, right? In order to manufacture. So the cost of maintenance of equipment, like for example, there are some oils that are needed in order to maintain the gears. So those are considered as indirect materials. That those oil for gears are not traceable in the finished product, right? So I just have to discuss the difference of direct and indirect materials as early as now. Okay? So again, on the manufacturing, the main costs, the number one main cost is the cost of the direct materials used. Okay? The second one is you have the direct labor. So, the same with direct materials, labor is actually the ones that you're incurring and paying the workers that are actually working on the finished product. So that means the people that you are paying and the job description of those um, workers is to work until there is a finished good, then what you are paying them are considered as direct labor. But sometimes you are paying some workers that is necessary for the production of finished goods. However, their labor is not actually in the making of the goods. Like for example, if we're talking about factories, that is our point of view here. We are a factory. We are a company with a factory. Okay? So, there are some employees there that you are paying for in which they are not really working on making a finished product. So, what you're paying them is considered as indirect labor. Okay? So, for example, in a certain plant or in a certain factory, there are supervisors that is just making reports on the progress and making solutions if there are, or telling solutions, devising solutions if there are production problems. So those money that you are paying them are considered as indirect labor because they are needed in the production, but they are not actually working on making the finished product. Okay, so that is what do we call indirect labor versus direct labor. Okay, so that's the second cost. And the third one is the factory overhead. So what are these factory overhead? The factory overhead is composed of the indirect materials that I have told you a while ago. We have the indirect labor that I have told you about. But in order to expound the factory overhead, I'll give you examples. But first, I'll define this factory overhead as costs that are necessary for production. However, they are not really traceable in the finished product or completed product that your company is making as a manufacturing entity. Okay? So, examples first, in the factory, if you are again using electricity, for example, for your machines. So, electricity is very much needed in making the finished product, but such electricity is considered as factory overhead because they are not actually traceable in the final product. Okay, the electricity. Aside from which, the maintenance supplies of your equipments like the oil and etc. So those are actually not traceable in the products but necessary for production. The maintenance cleaners of the factory, for example. So those salaries that you are going to give those maintenance people like janitorial, the ones that are cleaning the machines or even cleaning the floor of the factory, they are needed for the production process. However, their services are not actually put into making the final product actually. They are not, what do you call this? You understand what I mean? They are not they are not directly related on constructing, making, or production of your final products. Okay? So, we also have salaries of supervisors, for example, and factory managers if there are, and security guard for the factory, the salaries of those, and the depreciation for air conditioning unit in the factory, something like that. So those are all necessary for the production process. but it's not actually traceable on your finished product. Okay? So those are the three costs. And because of these three types of inventories and the three types of costs, product costs, of manufacturing entity, product costs, this is the main source of difference in the accounting for manufacturing versus accounting for merchandising. Again, on the merchandising, the inventories are only merchandise inventory, and the main cost of merchandising entities for their products or product cost is the purchase price of the merchandise inventory and freight in if ever. Here, we have direct materials used, direct labor and factory overhead, and there is also freight in, of course, if we're talking about getting your raw materials from your supplier and transporting it to the present location and condition that you want, then there is also freight in here. But basically, if we're talking about main cost, purchase price in the merchandise entities here, we have direct materials used, direct labor, and factory overhead. Okay? Now, let's talk about recording. Step 1 and step 2 of accounting cycle. Again, because of these things, because of these three inventories, because of these three costs, the accounting for manufacturing differs from merchandising because of these things. But all other else's that are not related to this, it's very similar to merchandising. Like for example, the concept of operating expenses that is being subdivided, the operating expenses is subdivided into selling expenses and then general and administrative expense. It's basically the same with merchandising, the manufacturing accounting. Okay? So let's focus here in this three. So what will happen in journalizing phase? For example, if we talk about raw materials, accounting for raw materials. So, of course, if you buy raw materials or raw material purchase, of course, we will have to have an entry raw material purchases. Okay? So on the raw material purchases, this is already including the indirect and direct materials, for example. So raw material purchases and then credit accounts payable or cash if ever. Okay? So you imagine if you make an entry like that, that means you have purchased some raw materials, and then after purchasing that raw materials, after you have received them, you're going to store them somewhere in the warehouse. Okay? Now, since it's already in the warehouse, the question is what will happen to this accounts payable, for example. It will get paid. It's as easy as that on the accounts payable. But how about the raw materials that you purchased? There is only one thing normally that will happen to that raw materials, which is it will be issued to production. Issuance to production. Well, on the issuance to production, if, what do you call this? If what we're talking about are raw materials that are considered direct, this will be the entry. Work in process. Something like that. And then, you're going to have credit raw materials. Again, if we're talking about direct materials. So this particular entry signals that the raw materials stopped being raw materials. So the first stage is already done. It's not already a raw material. It is already in the second stage, being a work in progress. Okay? So one inventory has been converted already to another inventory, the work in process or work in progress. So what if that is an indirect materials? Okay. Indirect materials. What will happen? If you issue indirect materials to production, that will be recorded first at factory overhead control account, which is, by the way, an OPEX account. Still, I consider them raw materials still, but it will be stored in the factory overhead control or the OPEX side. Sir, what is that? Why is indirect materials stored in the factory overhead control, whereas the direct materials is already in the work in process? So from inventory to inventory, and in here from inventory to OPEX? Yes. So let me tell you the whole accounting for factory overhead. You know what? I told you that the factory overhead is composed of indirect materials and indirect labor. And normally, these factory overhead controls are numerous. The factory overhead costs, they are numerous. The salary of the guard, the depreciation of the factory, the depreciation of the equipment is included in here. Um, the the materials that were used but is not in the final product. Um, Things like that are very difficult to get everything. Okay? So since there are a lot of sources for factory overhead, normally you do not apply the actual factory overhead in computing for the cost. Normally, what you will do, direct materials used, direct labor as product cost, normally you're gonna use the applied factory overhead first. What is applied factory overhead versus actual factory overhead? It's the same as like this. If there is a raw material, indirect material that were issued to production, that is considered as actual factory overhead, right? It's very difficult to get all of those. For example, in January, it's very difficult to trace all of the factory overhead. Okay? So that's actual factory overhead. How about this applied? This applied factory overhead, like for example, the direct labor has 100,000. The applied factory overhead is just like this. 120% of direct labor is the applied factory overhead. It will become 120. So there is an application rate. It could be a percentage. It could be um, number of hours from direct labor times rate. Like for example, um, 20 per direct labor hour. Something like that. Um, it is patterned like this, the application. Like for example, if there are 10,000 direct labor times 20, 10,000 times 10 is 100. That's 200,000. The point is, applied factory overhead is somewhat like an estimate only. And where did this estimate come from? It comes from experience of the company in the past periods, comparing the direct labor cost versus the actual factory overhead during the past years. Okay? Like for example, in the past year, 20x4 for example, we are now on 20x5. You have already traced all the actual factory overhead in the past year. And it is 80% of the direct labor cost. Then that means you could use this. You could put here, actually now in 2025, we are thinking that the factory overhead is actually 80% of the direct labor. So without knowing the actual factory overhead today, in January 20x5 for example, you could already charge factory overhead based on your experiences in the past years. Okay? So actually, this is the ones used by the company. And normally, the actual factory overhead cost will just be known at the end of the period. Because again, it's very difficult to trace the whole actual factory overhead. Okay? So, in here, you need to get used to the direct materials used is on actual cost. Direct labor is also on actual cost, but the factory overhead will just be in actual cost at the end of the period. So during, if it is not yet the end of the period, we're using the applied. But don't worry because this applied is a little bit realistic. It's because it came from historical experiences. Okay? So meaning, in here, the indirect materials will not be used to be, what do we call this? Will not be capitalized in the work in process inventory. You're not going to put that. Actually, this is just waiting at the end of the period. So all of the factory overhead cost will go to this account, which is in the operating expenses. It will go to the factory overhead control account. But later on, at the end, this will be investigated if there is actually a variance on what was applied and what is the actual later at year end. I'll discuss that later. Okay? But now you have to remember if there are indirect materials that were issued to production, it should be in the factory overhead control account. It should be debited. Okay? Next, it's not enough that you issue the raw materials, both direct and indirect, to production. Why? When we talk about work in process, it does not only include the raw materials that are put in there. It also includes direct labor, or let's call this labor in general. Okay? So when we talk about direct labor, the entry will be work in process. If you're gonna pay, work in process. It could be salaries payable or cash if ever. But normally that is considered as salaries payable. And when you pay salaries payable, credit cash. So it's as easy as that. However, you are used to salaries expense, salaries payable. Actually, there is still an entry like that in manufacturing. Actually, that is the entry for manufacturing. If ever, that is not considered as direct labor. Like for example, um, there is an accounting office in the manufacturing entity. So the salaries that are being paid to the accountant and to the bookkeepers and the other people in the finance, those are salaries expense, salaries payable. In here, since we're talking about labor from the people who are actually working to make your finished goods, their salaries are capitalizable to work in process or inventories. Okay? Because their services are necessary to bring the inventories in its present location and condition. So that is capitalized in the inventory, the direct labor. Okay? So if you have a factory worker, everything that you are paying to that factory worker will go to work in process, actually. Like for example, the SSS contribution here in the Philippines, SSS, PhilHealth, HDMF, it will go to here. And the other bonuses, 13 month, it will go to here in the work in process account. There, um, the amount incurred by your company paying them will not directly become expenses. It will be capitalized in the work in process. And let me repeat that again. Their services are necessary to bring your inventories in the present condition that you want, which is complete. Okay? Complete so that you can sell them. Okay? So that's for direct labor. How about indirect labor? On the indirect labor, on the indirect labor, instead of putting it in the work in process, you're going to put that again in the factory overhead control. The same with the indirect materials. And then, you have to also put salaries payable because you have to pay them. And then, the same entry if you're gonna pay them. Salaries payable, credit cash. They are only different here. The direct labor is capitalized in the work in process inventory. Indirect labor is in the OPEX, factory overhead control account. Okay? So, that's it for the issuance to production. So, normally, if you are making products, like first set of products, it will always be like this: work in process, raw materials, factory overhead control, raw materials, work in process, salaries payable, factory overhead control, salaries payable. It will go on until the work in process is finished. Okay? So after issuance to production, after recording for the labor, we will have completion of work in process. So, what will be the entry if ever the work in process is completed? But before that, there is one thing that is missing. So as you can see, the work in process has been already debited because of direct materials used. It has also been debited for the second time because of the direct labor. We have the third one. How about this one, sir? The applied factory overhead, which is coming from the experience of the company in the past. How do you put this in the work in process? Because you said there are three product costs. Okay. Actually, guys, aside from raw materials, this one, direct materials, this one, direct labor, we have also applied factory overhead. The debit will be work in process, and then we have the applied factory overhead account. So that's what will go to the work in process inventory. The direct materials used, the direct labor incurred, as well as the applied factory overhead. And as you noticed, they are very much, what do you call this? Reverse with the factory overhead control account. The normal balance of factory overhead control account is debit. The applied factory overhead account is credit. Because again, by the end of the year, those will be compared, okay? And analyze the variance. And of course, there will be some, what do you call this? Revisions on some accounts. Okay? After you compare that. Because factory overhead control, all of those things the actual factory overhead sources are being debited here. How about the applied factory overhead? Again, that is from the experience in the past years. So it could be a percentage of the direct labor cost based on the past experiences, or just like this, rate per direct labor hour. The point is, it is based on direct labor normally. Okay? So, how about completion, sir? So, on the completion, I'm so sorry, it's topsy-turvy. The writings on the board is topsy-turvy. But, you already follow. Okay? So, on the completion, of course, you are going to debit finished goods. Okay? And then, you have to credit the work in process account because it's not already considered as work in process because it's already finished. So that is already on stage 3. The raw materials became dead. Its life ended when it was issued for production. It became a work in process. And the work in process inventory, the stage 2, has been terminated when it was completed to finished goods. Okay? So, that's the entry. However, if ever, those finished goods are sold, of course, there will be a credit again, finished goods. It will be credited because it will be sold. It will be sold. Alright? So from being inventories, it will stop being an inventory because it will become part of the expenses known as cost of sales. Okay? Actually, that should be the last. However, I wanted you to have the adjustment because there is an adjustment here. We are going to versus factory overhead control, which is again the actual factory overhead cost versus the applied factory overhead, something like that. What will happen? For example, it is on the end of the year already. What will happen? You have to investigate, for example, and after you investigated, after you got all the sources of the factory overhead, you have factory overhead control or the actual factory overhead of 1.3. Example, so that I could expound. Okay? Now, on the applied factory overhead, there is only 1.2 million. So what will happen now, sir? Of course, you have to close the applied factory overhead. But then again, as you can see, that is credited. So you have to close that applied factory overhead. Okay? And then, you have to credit also the factory overhead control. So you're going to close that also. Again, the factory overhead control has a debit balance, so you have to credit it. And based on our illustrative, what do you call this? Illustrative amounts, we have 1.3 and 1.2. So the account will not be balanced. And this is what do we call as under applied factory overhead. Okay? So, how do we balance that one? You already know that the adjustment is just closing the factory overhead control account and applied factory overhead. But the balancing figure is actually option 1. You have to revise your cost of sales. If you have computed your cost of sales, you have to add 100,000. Because having an under-applied factory overhead, that means the costs that you have considered, the direct materials, direct labor, and this one is lacking. Okay? The cost that you have considered is lacking. And if the cost that you have incurred or recorded is lacking, then that would mean your net profit might be overstated. So that's what we mean by factory overhead being under applied. Okay? However, in some problems, it's not like this. Why? Because it's unfair to charge everything to the cost of sales. Okay? So the factory overhead of 1.3, the logic is that it has not been applied only to those goods that are sold. Actually, there is some application also of factory overhead on the inventories that was not yet uh, sold. Like for example, raw materials. So maybe there are still raw materials, work in process, and finished goods that should absorb the 100,000 and under applied. Of course, the raw materials is out of the question. Maybe the work in process and the finished goods should also take part of the 100,000, not only the cost of goods sold. Again, the cost of goods sold is for the unit sold. Um, there might be some finished goods that were not yet sold, and there might be some work in process that were not yet finished. Okay? So, for example, it's been very clear in the problem that your finished goods is actually 1,000 units, something like that. 100% complete, of course. You have work in process, which is 2,000 units. But it is 80% complete already. 80%. Cost of sales or cost sold, that's just the sold units is 5,000. Of course, since it was sold, that is 100% complete. You might have to charge all of them. Like for example, how do you charge all of them? If we're talking about units, we have 1,100% complete, 5,100% complete. There is no complication in there because you just have to add them. 1,000 and 5,000, that's 6,000 units. However, this one, on the work in process, you have to, what do you call this? Get the equivalent unit of production, equivalent complete unit. I'll just have to let you see the computation. So 2,000 times 80%, 10% is 200. So meaning 20% is 400. This is 1/6. So as if you are transforming the 2,000 80% complete units into as if 1,600 units, which is 100% complete. That is what we call as equivalent unit of production here in the cost accounting or manufacturing entities. So instead of saying 2,000 units at 80% completion, you say 1/6 complete units. So now, the complication will now be erased because as if the 100,000 under applied should be subdivided into 1,000 plus 1/6 over 5,000, over 5,000. 1,000 plus 1/6 plus 5,000, that is 7/6. So this will become the denominator. Like, you have to revise the finished goods inventory. You have to put 100,000 there, the under applied, times 1,000 units over 7.6 thousand. Something like that. Let me have the calculator. 100,000 times 1,000 divided by 7.6. So you're going to revise your inventory. You have to add 13,157.89, 158. And then your work in process, the same 100,000 times 1.6 over 7.6. 100,000 times 1.6 divided by 100,000 again times 1.6 divided by 7.6 equals 21,053. 21,053. So 20,053, 21,053 plus 13,158. So we have to deduct that 34,211 is for both the finished goods and the work in process. That means the cost of sales will only absorb 100,000 minus 34,211. We have 65,789. Okay? So I guess that's the complication for factory overhead. Again, let me repeat so that you will understand. First off, the factory overhead are composed of indirect materials and indirect labor that are necessary for production. Those are costs necessary to production, no question. However, they are not directly applied to the finished goods, to your inventories, like salary of the security, the maintenance personnel, and etc., electricity of something, the salaries of supervisors, managers, and etc. The rent for factory, if ever you are renting the factory space, something like that. So that's factory overhead. Okay? Now, the accounting for factory overhead, because it's very difficult to trace everything, it will just be finalized at the end of the period. Okay? So if it is finalized only at the end of the period, it is impossible for you to know the direct materials used, all the product costs in January 31, um, especially if it's very necessary for you to decide on something related to the product costs in January 31, because January 31 is not yet the end of the year, and it's impossible again to get the actual factory overhead because of a lot of sources. You understand? Since it is impossible to get the actual factory overhead because it's not yet December 31, we have to resort to using the applied factory overhead. The applied factory overhead, again, is a percentage of direct labor or a rate per direct labor hour based on the actual factory overhead that was incurred in the past year and is compared with the direct labor cost. So that is based on historical experience. Okay? So that's the one that will be used before the year end so that we could get the rough estimate of the product cost for January, for a certain job, for example, if ever, February, you get it? So that's the logic of the applied. So, meaning, all throughout the year before the year end, all of the actual factory overhead are debited on the factory overhead control account with a debit balance. Everything, the indirect materials, the indirect labor, and other sources will go to factory overhead control. Okay? So that is temporarily an operating expense account. Okay? Now, the applied factory overhead will be used. It will be added on the work in process inventory, and there will be a credit applied factory overhead. However, this is the main point, there will be an adjustment at year end wherein you have to close the factory overhead control account which has been debited, usually debited. So it will be credited, and the applied factory overhead with a credit balance will be debited. And you will see there if ever there is an under application of um, factory overhead or over application. So if under application, just like this, just like in our example, that means the cost is lacking. If the cost is lacking, then that means your inventories might be lacking and the cost of sales might be lacking. And if those are lacking, that would mean your net profit is overstated. So which is why the under applied factory overhead should be changing the cost of sales and the other inventories if ever. In the over application, the the effect is reverse. In the over application, the cost is greater, so might be your net profit is understated. So you have to make this adjusting entry. So in this adjusting entry again, the factory overhead control is closed. The applied factory overhead is closed. So the balancing figure could be the cost of sales. So cost of sales, that means the goods that were sold is handling the under application, which is sometimes again unfair. Which is why you have to get the units, the equivalent units of production for finished goods and the ones that were sold. So there is no complication about this because they are 100% complete. The complication is in the work in progress because you have to get the equivalent completed units for this 2,080% converted in our example, which is 1/6. But basically, if you did that, then there will be no complications already because you just have to allocate the under application or over application based on a fraction. So the total of the units, the completed units, will become the denominator. The numerator are their particular completed units, 1,000, 1,6, and 5,000. So actually, that's it on the factory overhead. So before we have an illustrative problem to really get into step 1 to step 10 of the accounting cycle for manufacturing entities, there is one still that I have to discuss, but that would be on the next video. Okay? So for now, you have to absorb this. You have to play and replay if possible so that you will be, what do you call this? You will be well versed on the transactions related to these three inventories and these three costs, especially when we're talking about factory overhead. Okay, because that is very much unique versus the merchandise entities. Okay, so absorb, understand, play, and replay until you master this. Okay, with that, if you learn, please click like, subscribe, and hit the notification bell. And see you on my next one. Okay?